Hey guys, I am super excited. I just completed earlier this morning an interview with Mayor McIlvaine, the Reading City Mayor, also Jake Mangus. He is the CEO and president of the Reading Chamber of Commerce, and Matt Mosley. He's the chief credit officer of Cornerstone Community Bank, and also Wayne Martin. He's a real estate broker here in town. We had a really, really good call. There's really rich information about small businesses, all the resources of our community that we can pull together, especially if you own a small business. What's available? We also talked about the local stimulus plan that the city of Reading is planning on rolling out over the next maybe possibly couple days. And so I hope you guys can watch this video. And if you have any questions, let me know. You can put them in the comments or reply to this email. Thank you so much. I hope you enjoy it. See ya.
Oh, there's Adam.
Here he comes. And there he is.
Yo, all right.
You made it.
Yep.
Oh, thanks, Adam.
Yeah, absolutely.
Appreciate it, man. Yeah, so I appreciate everyone getting on the call. This is awesome. I think we got a really cool group of people here. And so I basically just wanted to get on the call and talk about obviously small businesses and our local community. And I think that all of our knowledge can really help small businesses right now. And then also kind of give them resources of, what's available to them other than the PPP, obviously. And I'm going to have Matt talk about the PPP and what's going on with that. In case they missed out in what's available. So the first thing I'd like to do is just start with Adam and ask Adam, how's it been going with the city?
Well, well, it's been going really well. We have a great leadership team. And you have to understand, when this first started happening, the city had to adapt and make the changes to all the guidelines and social distancing like everyone else. And we're the third or fourth largest employer. So that was, that was a pretty significant task for us to catch up. So we had to get the city right internally. We had to take extra precautions for police and fire. So we've established some new protocols for public safety to protect them, and then also keeping the citizens safe and being able to maintain that level of service for public safety. So internally, it took a little bit to get everything squared away as far as what we needed to do to adhere to all the guidelines. And so I think we're in great shape there. So my focus, though, has been external. And we have two primary issues happening right now: the pandemic and then the economy. And so one thing about the city is we don't have a public health department. Our public health department is at the county government. And so we've been coordinating with them, working directly with them daily on what's happening in the county. How can the city help the county? So we're all working together as one team. And it's an interesting situation because there are three concurrent declarations of emergency. You have the city's declaration, you have the county's declaration, and then you also have Shasta County Public Health Declaration, which gives a lot of authority to our public health officer. So we're all working together as a team. I think it's been going really well. At the city, because of the role of the city government in our community, I think we have a lot of opportunity to provide more relief to our business community and potentially actually a stimulus that could help the local economy. So we're busy working on that. So there's a lot of things that I think that the city can do, and I think that our local solutions are really important because that's what's going to set us apart as we recover from other cities is the local solutions that we come up with and how we come together. So a week after the shutdown, I met with the vice mayor and asked her to put together a business task force, and I know Jake's a part of that, and thank you, Jake, for participating. And this group has 10 to 12 members from select industries that are impacted by the shutdown. And the goal is to be totally informed, be totally current with what impacts those businesses are facing, so that if the city can provide any direct relief, any assistance to those businesses, we can do it right away and be very adaptive. So that's the goal with the business task force, is to collect information, to understand what the business community is going through while it's happening, so that we can be there to help as much as possible. And I think that will go well. I would envision that even once we get the green light to start reopening and then completely reopen, I envision that group continuing to go through the recovery. And obviously our goal, the easiest metric to go by, is what our unemployment rate was before the pandemic and what it is after. We can also look at city sales tax and TOT tax, so we'll be keeping an eye on that. You know, you asked about how that might impact the city, the taxes, and so we're watching that very closely. How are our utilities impacted? Are we going to see as much as expected, like from the electric utility as far as usage? Because a lot of our budgets are based on that. So we haven't gotten a lot of that information back yet and haven't been able to analyze it. It's hard to tell with sales tax if we're going to see a dip. We actually think we're going to see a spike for a little while, and then we don't know if that will plateau or begin to decline. But we think there was a lot of increased spending through March with people making purchases. I know some, you know, I think like Lowe's, for instance, I heard that they were doing maybe 150 or 200% of their regular inventory. So there are some businesses that are spiking, right, and seeing a lot of cash coming in, a lot being spent. And then, of course, we have these other businesses that have been shut down. And the sad part about that to me is that, you know, these businesses didn't close because they're terrible businesses. They closed because they were essentially forced to close, you know, and the employees weren't laid off because they were bad employees. They were you know, asked to shut down. So that, to me, that's heartbreaking. And we want to help all the business owners that we can. We want to help the entrepreneurs get back to work. We want the employees to get back to work. So that's really what our focus is on the business side. And I think we'll get through the pandemic much quicker than we will, you know, the difficulties that we're going to see in the business community. So we'll really be focused on that for a while. And I think it's very important. So that's what we've been looking at in the current time frame. And I'll continue to push for that. And hopefully we see a great economic recovery. It's really hard to tell what's going to happen, you know, when we come back to work, because what we're going through is artificial, right? So it's hard to tell what a rebound and a recovery will look like. Hopefully it's very positive.
It sounds like a lot of just the people that I'm in contact with are very, very optimistic, you know, as far as what's happening, and don't seem to think that this is going to be that bad, you know, as far as the morale, you know, of the people, it sounds like.
Yep. But I'd be happy to answer any other questions. I can't remember. I know there was a few you'd mentioned earlier.
Yeah.
I have a question.
Go ahead, Wayne.
My question is, you know, when the economy starts opening up, we're obviously a big tourism draw. What are your feelings about having everybody come from the Bay Area, these hot spots that have had the COVID, and us dealing with that without having restaurants? I mean, it's just kind of a real mixed bag, and we're definitely pro-business. Any thoughts on that? Have you guys discussed that?
Yes, actually we have. And probably 2 or 3 weeks ago, I think, depending on what the timing of everything is, I think there's a real opportunity, because for tourism and for Shasta Lake this summer, one of the things is, I think people from the Bay Area and other areas are obviously going to want to get out of their homes and probably get out and get out and have an adventure. And I don't think people are going to want to travel internationally or fly. So they're going to want to stay in their cars. And so, you know, that does then limit the options of what most people are going to want to do this summer. And I really think there could be a great marketing campaign put around, you know, the coronavirus can't survive above 95 degrees or whatever, and Shasta Lake's average temperature is 101 in July. So I think there could be some really smart marketing, and I think we could see, you know, it depends again on what the timing is, but I think there's going to be a lot of people that want to get out of town, and because of the limited options of what people are going to be looking at, I think there is a real opportunity for Shasta Lake to do really well this summer. So hopefully that's capitalized on. We'll keep discussing that as things unfold, but again, that kind of depends on the timing of everything. But I think you're right.
Yeah, when we do obviously reopen, obviously I was just looking at a graph Record Searchlight put out. You know, if we reopen, there's a chance that, you know, it could obviously spread. And I've heard that the Civic Center, they're kind of having that as a potential place for a hospital. Can you talk about that?
Yeah, so it's a federal hospital. And there were 8 hospitals, I think, put throughout California, 250 bed hospitals. What ended up happening for the northern, I want to say the northern 13 counties, is there was going to be one hospital of 250 beds. They looked at multiple locations as to where they wanted to put this hospital. They landed on the Civic because of its location and proximity to our local hospitals. But what was also interesting is they wanted the reliability of RU power, you know, because we saw the outages and things with PG&E last year. So we were a much stronger location because of that, which is kind of fascinating to see how that continues to play out, having the reliability of RU electric over PG&E. So that, I know that was one of the deciding factors to be at the Civic. But what they ended up doing sort of at the last minute was splitting the hospital. And so we actually have 125 beds at the Civic, and then they put another 125 beds in Butte County. So we're serving the 7 northernmost counties of the state with that hospital. And it will remain open, I guess, until it's not needed. You know, I haven't heard of a termination date or what that would look like. I know they put up one of these hospitals in Seattle that they've already pulled down, that was open for about 9 days, but it didn't see very many patients, so they closed it down. So I'm not sure how long it will be here. Yeah. We did take a tour right when they got it set up, but since then it's been closed off to the public and the media and any sort of tours, but it's still there right now. And it was set up by the Army Corps of Engineers, but being run by local staff. So it is being run by local folks, and so it's available if we need the beds, which is nice. And so we have that extra capacity, that extra bed capacity. But yeah, we'll have to continue to wait and watch and see what happens here over the next week or two. And then I think, you know, you'll start seeing some decisions being made.
That's awesome. Thank you. Thanks for that info.
Yep.
Do any of you have any other questions for Adam?
All right.
No. Sweet. So I'm gonna turn it over to Jake and talk about small businesses in the community and different resources that small businesses have during this time, and then also when we get the economy, when we turn back, you know, get back to work, you know, what resources do we have? And I know you were working with obviously getting some stimulus stuff with the chamber and stuff like that. Can you talk about that?
Yeah, absolutely. Pete, thank you for having us on. I think this is really a great thing. Anytime we can, you know, keep putting the information out to the community, I think this is very helpful. So good on you and Wayne for approaching us and putting this together. So yeah, the Chamber of Commerce, right? We rallied as a staff. There are 3 of us on staff, and we have 930 members. And so thankfully, we were able to reach out to all of them within 48 hours, thanks to one of our members, 511 Enterprises, that does, you know, outbound calling to develop leads for companies. And they've helped us, like after the car fire, they helped us call all of our businesses as well. And the big question is, what is your greatest need at this time? And of the 900 or so businesses that were contacted, we received about 93, I believe, responses from businesses that said, we need money. And I think you'll hear from Matt Mosley in a little bit that we have a very fragile economy for small businesses in our community. And the Carr Fire really showed us that, where some businesses that didn't have any revenue coming in for a weekend were on the cusp of closing. And so I think that really shows just the nature of some of these small businesses in our community. So right now, to go this long, weeks and weeks without any revenue coming in, is a scary thing. And we want to do anything that we can at the chamber to limit the number of businesses that have to close for good. And so connecting them to available funding sources, you heard the PPP program referenced earlier, and I'll let Matt talk about that one. Very popular option for a number of reasons. There is also on the, additionally from the SBA, the Small Business Administration, and our local SBDC office, the Small Business Development Center, they're guiding people through the application process for the EIDL loan, which is the Economic Injury Disaster Loan. And for a few days anyway, it was thought that the maximum that any business could qualify to receive would be only $15,000, and it had been up to $2 million. Now, not many businesses in our community are going to qualify for a $2 million EIDL, but still, there is substantial money that can be had, and the interest rate is relatively low, 3.75% for a for-profit business, 2.75% for a nonprofit. You can defer the first payment for, I believe, up to 11 months, and the amortization schedule can be really stretched out. I mean, I've heard of 15-year amortizations. It could even go beyond that, from what I understand. Joe Radola is a wonderful resource at the local SBDC. We've been sending people his way on a daily basis, as we have to all of the local banks for help with the PPP. So the Chamber's been a great source of information, I think, on that. And for me, I'm really trying to keep up-to-date, accurate information out into the community. We have a new website, or at least our current website, that's been refreshed, and there is a landing page that includes a lot of COVID-19 business resources. Another thing that we did, and this is credit to Erin Hull on the chamber staff, is she took it upon herself to create a comprehensive list of restaurants that are currently offering takeout and delivery service. If those are free, if there's a fee, but just encouraging people to use that list and patronize local businesses. That's a big deal.
Where can they find that list?
You can find it at readingchamber.com. Also, it's on our social media as well. On the homepage for the chamber, there is a banner that's going by, and it's the first one that you see, and it says COVID-19 Business Resources, and you just click on that, and it takes you to that landing page. We're continuing to update that as well. We're also encouraging people to, if let's say you're in the situation where you really need a haircut and your barber is not open, well, check and see if there's a chance that you could purchase a gift card or a gift certificate to that establishment.
Oh, that's a good idea.
They get the revenue now, and then when you can get out and they're open again, you could use it later.
I like that.
There may be some little nuances that can screw up people as far as unemployment insurance, and from an income standpoint for the business, I'm not sure how that affects that, but I think the overall message is just try to keep your dollars in the local economy. Adam has done a wonderful job, Mayor McIlvaine, in the $50 rebates to all RU ratepayers. And so we'd like to kind of throw out that challenge that, show us what you are doing with your $50. How are you keeping those dollars in our local community? I mean, the $50 you saved on your utility bill could go to, a restaurant for a dinner out for your family, or a dinner in, but, takeout. So that kind of an example.
Yeah, I love that idea.
Yeah,
Yeah.
and then maybe one last note is that we are so excited and encouraged by the city's proactive response to this, and the idea that an economic stimulus is coming soon is very exciting. The fact that they've reached out to the chamber and asked for our opinion and help with how can we help local businesses more at this time. It's just great to hear that from the city. And I think, I'm not going to spill the beans, but this is going to be a significant economic impact on our community, and we're very excited about that.
Wow. That is exciting. I
Something to
didn't know
look
that.
forward to.
I didn't
Yep.
know you guys were working on that.
Yep, absolutely.
And what's kind of a timeline you guys are thinking as far as coming to a decision on that?
Well, I know that I'll throw this out, and Adam can, elaborate on it. I believe an announcement is going to be coming soon, but certainly the council meeting on the 21st is when options will be presented by city staff to the council to consider. So that is a virtual meeting for the public. So if you would like to jump on the City of Reading website, click on the link and submit any public comments, you can do that now. And you can also follow along online when the meeting happens. And is it at 6 o'clock on Tuesday, like normal, Adam?
Yes. Yep.
Okay,
So yeah, those decisions will be made mostly next Tuesday, at the council meeting next Tuesday. So we've been looking at several different options. We'll go through probably each option individually as a council, and then once those options are decided on, they'll be bound together and be essentially an economic recovery package for the city. And we're looking at direct relief, significant direct relief for small businesses on electric bills. We're looking at offering potentially the hotels not paying TOT tax for a quarter, but then amortizing those payments over the following 9 months. And some of the things that you're seeing in the business community where there's relationships, say, between a landlord and a leasee, where they're saying, hey, how can we make this work over the next year? I don't have any cash flow right now, and it's going to sink me. But if I could get a break, I could make it through the year. So we're looking at those same kind of tailored solutions. And that's the difference of what we can do locally versus the state or federal, is that we can create a more customized solution for Reading that's impacting the exact business and industries that are being impacted. So just because we're here with our feet on the ground, we have a better eye on things.
Hey, Pete, I have 2 final notes, if that's okay.
Yeah, definitely.
Okay, so the first one is that we made a commitment as a chamber that we would not drop any member who has an inability to pay at this time. We think that the best message we can send our membership is that we will stand beside them during this time of challenge. So we're going to be working with our current membership to make sure that they know that, and they're going to remain with us. And then for any business that's not currently a member of the chamber, we're offering a free 12-month membership to the chamber. Certainly during the shelter in place time period, that offer will be active. And to me, it's about growing the voice of business. It's about allowing us to better communicate to more of our business community what is going on in Reading. And it's also the idea that we are going to be very critical as far as our role in the comeback story of our community, the business recovery time period. And it's about putting Shasta County back to work. So I want to know that I'm representing as many businesses as I can. We hope that what we do will earn a renewal where people will pay to be chamber members in a year from now. For the time being, it's proving grounds for us to show that we're worth it. So I'm excited about that opportunity, and people can, find that post on social media or on our website, the Join Now button, and just click the free option, and you'll get all of the benefits of a $300 membership for no cost. So we are very excited about that piece.
That's awesome. Thank you, Jake, for doing that. That's huge.
And then I think also this is a time for many businesses to really examine the way that they are doing business. I mean, you look at the way that we are communicating right now. I think that you'll see some hybrid remote physical workspace happen as we go forward. People may take smaller spaces, their footprints might shrink. I think what it's done for us and for a lot of businesses is you narrow your focus as to what is the most important thing that we do at this time. And for us, I think that it's allowed us to explore strategic partnerships that we should have probably had in the past, and hopefully we'll have in the present and going forward. So there are some silver linings in all of this.
You know, one of the things that, you know, looking towards the future, even though we're in such a difficult place right now, it seems that medical could be a real boon to have more nursing programs here in Reading, where we really specialize in creating a lot of nursing, because, you know, this pandemic is, you know, really severe, you know, but the big question is, in the future, you know, what will we do if we run into this again? Do we have enough nursing staffs? I know a lot of people have been waiting to get in nursing programs for a couple of years, and they can't do it in Reading. They have to leave town. And I'm wondering, you know, is there a way to bring some jobs here to create nurses and specialties, maybe, you know, some medical products and stuff? There's a great opportunity. City of Reading, Adam, you've got all that industrial land out there. Maybe there's something we could do with that to attract a different kind of business here in Reading. And also, you were talking about utilities. You know, one of the ideas that I thought about floating was, you know, if we have so much sun here, what if we had Shasta Dam solar situation here? Oops, sorry. You know, here in Reading, where we could supplement more power to the rest of California. Just, you know, some ideas that Reading, we've got some great things here. And from a real estate standpoint, we're getting phone calls from the Bay Area, LA, people that are so used to telecommuting now, they like it that that we're not, you know, so populated. We had a low COVID count, and that's a real positive. And if you were to talk to a lot of realtors, they would say probably they're getting the same phone calls. So something to think about. There's some positives here in the future.
Thanks, Wayne. I did have a question for Mayor McIlvaine. So, is there going to be any from the care package? Will there be any stimulus money floating down into our city? Or
yeah, so we're looking at doing a significant stimulus, but how that would come into our economy from the city is through essentially various development projects. So we have a laundry list of things that have been needed to be done for a very long time, and small projects pretty much all over town. And so what we're looking at is putting together a package of all of that work that needs to be done. And we have about, I want to say, $8 to $10 million in carbon tax credits that's been, you know, sitting in a reserve for years, essentially waiting for a rainy day. And it's pouring now, so might be the time to tap into that. So we are actually looking, one of the big parts will be solar. We're looking at doing a pretty significant expansion of solar rooftops on city-owned property. And we do have a 10, I think it's still at 10, it might be 20 megawatt solar farm going in at the airport. And we're just waiting for clearance from the FAA. So we do have a lot of solar that's in the works right now. But yeah, so that's kind of the stimulus, how we'd be looking at the stimulus, is that would be going into the economy through those types of projects. But we think that about 90% of the projects that we want to float are 90% can be done by local businesses. And so we're talking numbers anywhere between 10 and $25 million worth of work that we can put out to the local business community.
Awesome. Thank you. So Matt, I'd like to kind of switch gears and talk about. So Matt Mosley is here from Cornerstone Community Bank. You're the Chief Credit Officer there.
Yep.
And so, can you? Obviously, you're getting inundated right now with the PPP loan. Can you just tell us what the PPP loan is, and what some of the benefits are, and then also what do you see as some of the drawbacks of this PPP loan?
Yeah, the PPP loan, it's the Paycheck Protection Program. It's basically at a high level what it is it's a way that the federal government has funded unemployment via the rails of the lending institutions. So basically the banks are in a position where we collect applications for this program. We fund those as loans, and then we monitor and make sure that the funds are used appropriately. And then we send off, after 2 months after the loan's funded, we send off a certification signed by the borrower and evidence that the funds were used appropriately to the Treasury, and we request forgiveness of the loan. And the Treasury will then electronically send the bank the money, and then that gets applied to the loan and pays it off. So it's a forgivable loan. Some people call it free money. In some cases, it will be more like free money. And in some cases, it will be just helping people keep their folks employed. It's a very broad program. Almost every business qualifies. And because of that, there's been just huge demand. In fact, when we first heard about the program a few weeks ago, once the legislation got released, I don't even know when that was anymore. This has been a blur the last couple weeks. But I read the legislation, and we realized really quickly how big this was going to be. So we quickly tailored our lending program. Of course, the rules weren't fully written yet, so we wrote our program and did not release any applications to any of our borrowers, because we knowing how the SBA works and the government works, we knew that right before they launched the program, everything would change. And so we held off and waited and kind of got all of our customers in the queue and said, okay, guys, get ready, because when this thing goes live, we're going to blast out your loan application, like the real loan application that you're going to have to fill out, and tell you what the requirements are and the rules, and you got to get jamming and get this back to us so we can get as many of these funded as possible. In fact, seeing how big of a demand we knew this was going to be, I reached out to another bank in our area, talked to their controller, and just said, hey guys, be ready for this. And that bank was not ready at all and said, oh, I don't know if we're going to participate in it. And, it took them like 3 or 4 days after this program went live to really get their act together. And I think a lot of the bigger banks were that way too. And fortunately they were able to get their act together and were able to help a ton of their customers. Because really, this is one of those opportunities for us as a community bank and for this other bank and the other banks around us to look at this and say, okay, what can we do to be part of the solution here? It was kind of it was a mixed blessing for banks to be relied upon by the government and by all of the businesses to provide these loans rather than the government just handing out free money as it was. It kind of put us in an interesting position because we're in a place where now we have capital issues potentially depending on demand, liquidity impacts, just capacity, bandwidth to be able to pull these things off. And and because of that, and the amount of unknowns that are out there and misinformation, I mean, the misinformation was huge. Because of that, it's kind of a recipe for some people to be really excited and some people to be really upset, thinking that, oh man, I missed out. And how did I not know about this program in time? And so it's really an opportunity then for all of the banks to kind of jointly say, okay, let's take this up and figure out how we can serve as many people as possible. So something that we, in light of that and knowing that the funding would be limited, and most recent update this morning, they ran out of funding. So the program is
The Fed
officially
did?
closed. Yeah, there was $349 billion allocated. So that money's tapped now. So they're not accepting any new applications. But knowing that that could happen, it kind of put everybody in throughout the entire nation in a race against each other to get money. So every bank was competing with the other banks. Every borrower competing with the other borrowers to see who could get their process done quickest. And it's kind of an unfortunate position to be in. I mean, I guess that's kind of capitalism too. But we fortunately, our bank, and I can't speak for the other banks locally, but for our bank, for Cornerstone Bank, we were able to serve every single one of our customers that got into our application queue. We served. We helped. I believe we have 325 or 350 borrowers that we funded, and we've already funded every one of our borrowers with the exception of maybe 20 or 25 of them. So that money's coming today. So we got that money out very, very quickly. And the reason why is because we knew that, okay, we're in a position where we're trying to keep people employed, and we never lost sight of that. And none of our staff, all of our employees, we marshaled every resource from our bank. Like I was saying to the guys earlier, we had the president of our bank, Jeff Fink, underwriting loans. We had our controller underwriting loans. We had our tellers working the phones and putting packages together and communicating with borrowers. We had every single person in our bank focusing on this program.
Wow.
And because of that, we got money out very, very quickly. I read a report earlier today that says that the number of dollars that have funded out of this program compared to the amount of money committed. So we had 349 billion committed. But the percentage of that actually has been lent out at this point is extremely low. Now, on the other hand, and I'm bragging, as you can tell, because I'm really, really proud of Cornerstone Bank, and probably the other local banks have done the same here. We've seen this as such an urgency that our money's all out there already. So we've got, and I can't, unfortunately, because we're publicly traded, I can't disclose dollar amounts, but it's a lot. And I could say it would probably, we definitely have served thousands and thousands of employees in our region.
That's amazing, bro. That is incredible.
Yeah, we're really proud. I mean, it's hard to look at this without getting emotional and being so proud of how many people we've been able to help. So it's really exciting. And I think that for our bank, at least, hopefully we're earning some favor with the community as people that that weren't already customers of ours may become customers of ours because of this.
Yeah, I was gonna ask you. I had a buddy that went and applied. He doesn't live here in town, but he's from another state. But a lot of he banks with a credit union, so the credit unions aren't participating, I don't think. But no banks would actually let him apply because he's not actually their customer. And so was that happening here locally?
Yeah. The banks were not, from what I hear, I can't speak perfectly on this subject, but the word on the street was that other banks were not accepting any applications from non-customers, and then there was one bank in particular, which we won't go into, but their stance was, we will only do this loan for you if you take all your business from Cornerstone Bank and bring it to us. So that was kind of an unfortunate thing. Fortunately, we were able to do it anyways. But our bank, what we did is we served our customers, and we were able to take some non-customers as well, because we're looking at more from a community-wide standpoint, rather than from just our customers.
Yeah.
So we helped a lot of people.
That's amazing. So many employees. I mean, when you say thousands, that just gave me chills, for our community. Like, that's crazy.
Yeah, no, it's something we're extremely proud of. Now, the particulars of the program, for those people that have applied or haven't applied yet, the high level particulars are basically you take 2019 wages that you've paid out as an employer. You can include retirement, insurance, some of those things. No federal taxes though. You divide it by 12, times it by 2.5. That's your loan amount that you can apply for. And then that's the qualification phase. So that's how you determine what you would be eligible for. So then that's the loan funds, and then you have 2 months to spend that money and to document it. And the money has to be spent, at least 75% of that money has to be spent on payroll. And then the remaining 25% can be, or less, can be spent on lease payments, utilities, which is a pretty broad term. There's a lot that falls under that utility category, and what they call mortgage interest. Now, the mortgage interest thing is kind of in question. There may be some more light on what that term really means. Do they mean just mortgage interest, like commercial mortgage interest, or do they mean interest on loans? So that we'll find out probably more in the next couple of weeks on that. So that's how you basically, the use of the funds is how you determine how much of that loan is forgiven. So there's the qualification, which is pretty cut and dry, and then the use of funds for forgiveness. That's step 2 of the process. Any money that's not forgiven presumably would still be sitting in that company's account, and they would then in turn turn around and pay the unforgiven portion back on the loan so that the whole loan is paid off. If they don't do that, the whole loan is essentially, the first 6 months is deferred for interest. And then after that, it's a 1% interest rate for the next 18 months. So it's a 2-year maturity. So you have to have that loan paid off in 2 years. Now, there's been a lot of people that have kind of talked about, oh, well, what about arbitrage? Let's just borrow on this and not put anyone back to work. And then we've got that 1% money that we're borrowing for 2 years. First off, I would probably ask them to kind of think about that a little bit more in the spirit of what this is about. And hopefully they're not doing that. But also to kind of warn everyone that the SBA has already started discussing how they're going to hold people accountable that do that. So there's nothing official on that yet, but there's some rumblings that there may be. So just fair warning for those people that might be borrowing as a low interest loan and not keeping people employed, that be very careful if you're going to do that, because it might come back to bite you.
Wow. Yeah, that's a lot of information. Question, do you think Stephen Mnuchin, the Treasury or whatever guy, do you think that he'll get some more money for this SBA loan?
I don't know. That's I think the chances are probably pretty good. Yeah. But we'll see. I mean, and if there is, then we'll look at it doing a round 2 for it.
Yeah.
Fortunately, there's been some stuff that's helped the banks out in order to provide, to really leverage up and provide these loans without straining their capital too much. There's actually a facility where banks can borrow on and borrow from the Fed and pledge the PPP loans that we've made in order to get more liquidity, which would typically hinder your capital ratios because basically you're leveraging up how much capital you have, growing your balance sheet with not growing your net worth. So basically there's some triggers there. Well, this would not count against the bank, any borrowing from the facility.
So it doesn't go against the balance sheet, basically.
Yeah, against the capital ratio. So it allows you to borrow infinitely, basically, if you were so inclined. So that's helpful. So I think round 2 will probably be a little bit, if it comes out, it'll be a little bit smoother than round 1. Round 1 was just crazy. But yeah, we'll see what happens. I know something is needed. I feel like if we get round 2, that'll be really helpful. But at this point, one thing that I'm concerned about, I know you guys have talked a little bit about, what recovery looks like, what people getting back to work looks like, but concerned about the short-term nature of this 2-month stimulus that we have, basically. because I'm a conservative banker, and so I'm going to look at things half empty most of the time, just to be careful and be prepared. But we're pretty concerned that this is going to be the economic impacts of what we're going through with this coronavirus and the shelter at home or shelter in place standpoint is going to impact our economy for much longer than 3 months, much longer than 6 months. I tend to follow an economist who puts stuff out every morning, and he's talking about I'm trying to think how long ago. It was about a month ago. He put out a analysis on this pandemic and effects on the economy, but this and also the infection rate, mortality rate, and compared it to the pandemic. I think it was 1818, 1819. Of course, technology and medical advancements much different, but they were projecting a triple wave, where the first wave of infections is severe, and then it kind of dies down, and the second wave is much more severe and it dies down, and the third wave is a little bit less severe before you get kind of that herd immunity. And based on that, we are just getting over the hump of the first wave. So I hope that that's not true and that's not correct. But for me and for our bank, we're trying to do whatever we can to be prepared in case that really does happen, in case we get into another huge wave and we get into even more, we may get people back to work and people kind of get back to the economy. And if this next wave hits, and it hits like it may hit, we want to be prepared, and we want to make sure our borrowers are prepared for that. And so we're kind of planning for that to happen, honestly, and hoping that it doesn't. So some of the stuff that we're looking at is about 3 weeks ago, ahead of any regulatory cover for the program, which is really important in the banking world, is if you have regulatory cover, if basically the regulators back you in what actions you're taking, then you're okay. Otherwise, you're taking a risk. Well, this is one where we took a risk because we knew that our borrowers were going to need help. And before the regulators came out and said it was okay to do this, we promoted and granted 3-month deferral, principal and interest deferrals on on our commercial term borrowers and our consumer term borrowers. We did that because we knew that this was going to end up being a huge impact, and it was the right thing to do. Fortunately, about a week after we launched this program, the regulators, the Fed and the OCC and the FDIC all came out and said, yeah, banks should do this. And so we're like, whew. But it was the right thing to do. And our borrowers really benefited from it. You wouldn't believe the amount of phone calls that we had with borrowers that ended with our borrowers just weeping. I mean, just absolutely in tears. So excited. Like, one lady said, I was going to have to close my business this weekend, and now I don't have to, and I live to fight another day. Sorry, I get choked up when I think about it.
Wow.
And so what we're doing is we're in light of the fact that this could be a lot longer. That's why we did the 3-month thing, and we're going to be prepared to do more to help our borrowers. I'm not going to issue any statements that say exactly what we're going to do, but we are ready and willing and waiting to see what actions need to be taken, and we will take that and support every one of our borrowers to get them through if we have this second wave, like it could happen, or if we have just a prolonged period of time to restaff and get people back to work and that sort of thing.
I get chills when you talk about that, because like the benefits of using a local company that really cares about our local community is like, that's just coming out of you like no other. You know what I mean? That's crazy. Super awesome. That we have people that care for our community so much, and that care for there's so many families out there. So thanks a lot, Matt, for all your efforts. it's really incredible what you guys are doing at Cornerstone.
Thank
So,
you.
Yeah. Yeah. Well, we don't have much time left. I did want to touch a little bit with Wayne. Wayne's a local real estate broker here in town. He's been a broker for a long time, and I'd like him to just touch on, the real estate aspect of it with homeowners. There's a lot of people, that was in the market before this happened. The housing was just booming. So, Wayne, can you just touch on our local real estate market?
Sure, love to. Last year was an incredible year in real estate, and it ended a little bit soft in the first quarter. We were all looking at it and talking to the appraisers, and they say, well, prices were a little bit soft, but in our company, we break the market down into $50,000 increments. And so this morning I was looking at some of our numbers, and basically it had been a seller's market up to the 550 to the $600,000 market. We were looking at probably around 3 months of inventory. A balanced market is normally 6 to 7 months of inventory, where neither the buyer nor the seller have an advantage. The sellers have had an advantage up to this time. We got shut down. We were shut down for a few weeks because we're non-essential. Lending continued on, but real estate hadn't. Then they lifted that. So that's been very interesting. We've had a lot of phone calls. We've made a number of sales. I know a number of realtors that I've talked to that are very active, that are full-time, it's not a side hack type job that they have. They've been busy. Now, whether that will continue, we don't know. And a lot of it actually comes back to you, Pete, on the lending side, because the lending programs are changing a lot. Secondary market is dictating a lot of the loan programs from what we've heard from you and from many other lenders and that. But I see a lot of pin-up demand, but we're just very cautious about the first-time home buyers. Nationwide, the jumbo loans, a loan of 600,000, correct me if I'm wrong. We don't have those around here a lot.
Over 510.
But that's just been total chaos and apocalyptic. And so a lot of the feeder cities to Redding, where people want to sell, like in Seattle, San Francisco, LA, where they use those types of loans, they're basically in trouble. And so that may really affect the market from people coming here. So what's your take on that, Pete?
On the real estate side?
Yeah, on the lending side.
Matt touched on a little bit on it, but the government coming out and saying that the forbearance in the CARES Act for homeowners not having to make their mortgage payments. So in the CARES Act, they announced that you don't have to make your mortgage payment for up to 6 months, and there's not really any qualification. You just call up your mortgage servicer and you let them know that you're having trouble, and then you don't have to make your mortgage payment for up to 6 months. And then after 6 months, you can actually apply to defer that for another 6 months. And so that's really, really, really challenging for the banks and the servicing companies. And it's causing massive chaos with liquidity and trust, because we're looking at it as a lender, and we give a first-time home buyer this loan, depending on what they do for a living. We're really, really, really worried about them making their first payments, the first, couple payments, because of the forbearance. And a lot of the public do not know the forbearance and what this actually is. It's basically just a delay of payment on their mortgage, and they actually have to pay that back, once that delay of payment is up. And and a lot of borrowers think that it's going to be on the interest is going to be added to the back of the loan. Well, in the mortgage world, the residential mortgage, in order for you to do that, you have to modify that loan. You have to modify that note rate, the note. And so in order to modify the note, it takes a lot of paperwork. You got to get the investor involved, and it takes manpower. And banks don't have manpower right now. I mean, you heard from Matt, and it's just crazy. It's like, how do you staff up when you're bleeding cash for first payment defaults and margin calls? It's really, really challenging. And so because of that, the guidelines are tightening, and I think it's temporary until they can, this week, just today, another, I think 5 million, jobless claims came out, another 5 million. And last week was 6 million. The week before that was 5 million. So, 20% of the job force is like right around the corner. If we have another 5%, that's like a 20% unemployment, which is not good for residential mortgage in general. So, we're definitely, the banks are definitely tightening up their guidelines.
Can I just mention real quick on that? Make sure that the people that you guys are talking to understand the difference between deferment and forbearance. Like Pete just explained, I'll just explain one more time. Deferment, like what we've done, is it truly, you have no payments and then it gets tacked on the back end. Now, forbearance, at the end of the forbearance period, all that is due.
Yeah.
So we're telling people, be very, very careful to before deciding, I can't make my mortgage payment on my traditional mortgage, I'm going to forbear my payments, because you've got a brick wall you're about to hit in 6 months where you have all this money due. So be very, very careful on that.
Right. I want to make a comment too. Back in the Great Recession, my wife and I, we were probably the largest foreclosure real estate company in the 4 counties up here. And a lot of the people that got foreclosed out were working with their mortgagors and trying to do workouts and all that. And it was a disaster. They were making payments and they still got foreclosed out on. So like what Pete is saying, they're not equipped to rewrite all this stuff, because they have to go to each individual investor, as I understand, and negotiate with them to be able to put the money that was not paid and put it on the back. And it's going to mess up the secondary market. I wouldn't bet on that. I think that's a bad bet. And the other problem that I see, and Matt, being a commercial lender, is how is that going to affect their credit in the future if they need to go out and purchase anything, and cars or anything else, or things in your business? It could potentially have a dramatic effect. Any word on that? How, if you go into forbearance, how that's going to affect the credit?
Pete, you may be able to speak this too, but forbearance should not affect the credit as far as I know. But if you can't make your 6 months of payments all at once after that 6 months is up, then that'll go against your credit for sure. And I would venture to say the vast majority of people that take a forbearance are going to not be able to make their payments 6 months from now. 6 months worth of payments.
Yeah. They've made it clear that it's not going to affect their credit score, but the banks aren't going to be able to put a current payment on the payment record. So you have a score, and then you have how many like their payment record. And so what are they going to put for those missed payments? It's basically going to be some kind of blank. And so when we go to lend on someone, we're going to see that they had missed their payments, and obviously it didn't affect their score. And so there's not been any guidance yet through Fannie Mae or Freddie Mac that have talked about what that's going to look like. I imagine that they will do something to help those borrowers out. Like Matt said, if they're able to make those 6 months up, at month 7. But yeah, I really appreciate everyone being on this call. You guys, I think the information here was just so rich and so good, especially for our community, for our small businesses. I do want to ask Mayor McIlvaine one last question. There's one thing that you would like to say to our city, all the homeowners out there that are listening, going to tune in, what kind of message you want to send as far as hope and for our city?
Well, again, thanks for having me on today, and want to thank everybody else, because this, what's going to make us successful is in recovering is coming together like we are now and discussing these solutions, coming up with solutions, tailoring things to the local needs of our city. It's advantageous for me because I'm a small business owner. And so I've been going through the same thing that our businesses have. Obviously, I'm very lucky in that we can do our work from home with the way that the business is set up. But I think what we need to remember is we're a tough city. There's definitely a toughness to people in Reading, top to bottom. And I think that we're also a very charitable and giving city. So I think all of that is a recipe for success. And I think we will recover well. And so I'm hopeful, and I think we'll get through this shortly, hopefully sooner rather than later. And I do hope that they come out with a plan soon, because I just don't think people will tolerate it for too much longer. People will want to get back to work and regain their livelihoods. And so we all need to work in concert to make that happen. And again, I'm just really impressed with everybody on the call today, and thank you for your commitment to the community. And I think everybody's doing a great job. And I've been really impressed with Reading too, following the guidelines that have been put out by the CDC and the federal and state governments. So everybody's been doing a great job, and looking forward to a quick recovery and getting everybody back to work.
Awesome.
Yeah.
Well, thank you, Mayor. I really appreciate you being on the call, and Jake and Matt and Wayne, thank you guys. And we'll get this out to everybody, get it out on Facebook and share it with everyone. So thanks, guys.
Thank you.
Thank you.
Thanks, Pete.
See you guys.
All right.